Hello. You're probably wondering, whoa, that's Spencer. What's he doing here? Well, Spencer is out. Mitch covers for me. And now Mitch is out. Spencer covers for Mitch. So welcome, everyone, to SPAC's Attack. I'm Spencer Israel. That other guy, no, that way, is Chris Katje. Chris, how are we doing? How was your, well, I shouldn't, I say how was your weekend as if you weren't here yesterday, but I wasn't here. So I'm going to ask you because I was out. How was your weekend?
My weekend was good. I'm doing good today. How about you, Spencer? We're happy to have you fill in and happy to see you back after the weekend.
Thank you. Thank you. All right, Chris, we got a big show today. We got 2 guests coming up in about 15 minutes or so. We're talking to somebody from the SPAC and somebody from the company that they are trying to merger with. Rajiv Shukla is the chairman and CEO of Alpha Healthcare Acquisition Corporation, AHAC. Alpha Henry Alpha Charlie is the ticker. And we're talking also to the founder and CEO of Humacyte, Dr. Laura Niklason, the company that is on the other end of that acquisition. So we're going to talk about, well, Chris, what are we talking about? I'm going to ask you because you're going to be doing the interview.
Yeah, super interesting company. They've got lots of, life-saving technology in play here. So excited to dive in and hear more about this platform they have and kind of their timeline, targeting people with diabetes and other areas. So interesting technology and that pipeline of, items in phase 2 trials right now.
All right, before we get started, go into some headlines. Everyone drop us a like if you would be so kind on YouTube. We appreciate that very much. Also, if you were watching any of our shows in the last week, you know that we are approaching 100,000 subscribers on YouTube. And to celebrate, we are running a contest. We are giving away a free share of Tesla. How do you play ball? Very simple. You click on the link that I just posted in the chat, and that is how you enter to win a free share of Tesla. And also subscribe to Benzinga on YouTube if you have not already. If you're wondering about what is the code to enter the contest, the YouTube code, it is SLIMERAZ, SLIMERAZ, SLIMERAZ. All right, with that being said, got some housekeeping items out of the way. Mr. Katje, let's go into some headlines, shall we?
All right, perfect. All right, so up first we have Lordstown Motors, so ticker RIDE, reported earnings last night, or should I say their quarterly financial report. So a net loss of $125 million in the quarter. They ended the quarter with $587 million in cash. They're guiding for operating expenses to come in at $115 million for the full year. And CEO said, as a result, we need to raise additional capital to complete our business plans and have begun those discussions. They said they have several opportunities to raise capital. They're now targeting late September 2021 for the start of production for the Lordstown Endurance pickup truck. They're seeing higher costs for parts, equipment, shipping, and third-party engineering resources. And then the key here was an update saying that production in 2021 could be limited and at best be 50% of their prior expectations. They're going to host analysts, investors, customers, and partners during the week of June 21st for factory tours and test drives of the Endurance. Shares were down 10% after hours last night to 867. Another key here, Spencer, I don't know if you saw this, but someone shared on Twitter from their conference call, which I didn't have a chance to listen to, that Steve Burns actually said that at best 50% production comment is only if they don't get new funding. And that if they do get funding, they will be able to meet their goal of 2,200 trucks for 2021. Okay. So I think there's some confusion here, but I don't understand why your press release, which more people are going to read, would say at best 50%. And then you come out on your conference call and say, well, if we get financing, everything's going to be okay. Well, what do you make of that?
Yeah, I mean, it comes down to clear communication from the company to the public, right? So it doesn't sound like it was super clear. Obviously, and also what they said, which I thought was interesting, is there's these. I didn't realize this. They haven't responded to the Hindenburg report.
Yeah, yet, really. Yeah. How about that?
I just assumed that they issued some defense as companies are wont to do, but no, they said, "Oh, we're getting around to it. We're gonna have a response soon," right? Which is that report was 2 months ago.
Months ago. Yeah, that was interesting to me too, Spencer. Thanks for reminding me that. So Clover Health, when they had the short report, right, and they said they were going to put out a response that day, and then they ended up not issuing a response to the next day. I was like, whoa, why are they taking so long? And here we have Ride. I mean, taking months to get that response when, I'm not sure what that means. For me, this thing has been a sell since it started running when they announced the upcoming event in June. I think shares are going to continue to trade down over the next couple days. The couple catalysts here now are when they announce the new funding, because they don't make it sound like they're going to sell shares necessarily. Maybe they partner with someone, get some funding that way. And then also the upcoming event where they're going to show off their truck and do the test drives should get a lot of press coverage from that. And that usually has a tendency to help some of these, EV startups. Like Lucid Motors just had some test rides at one of their events. So I don't know how much lower Ride can go here. I think it does see another pop going into that event, but really that timeline now of the delays this year and maybe only hitting 50% of their goal. I mean, let's face it, they have Ford, they have Tesla breathing down their neck now for electric pickups. So
this is I think that investor analyst day, whatever, in June, this is going to be a little awkward, perhaps, just because it's been such a rough go of it. I think a lot of people are maybe the stock got well ahead of over its skis there for a little bit, but we just saw Ford last week drop their lightning, right? And it's just, as I was talking about this morning, so I'm going to repeat myself a little bit here, but there's just this stark contrast between Ford, a company that makes cars in their sleep, and Lordstown Motors, a company that has never actually produced a car before, right? Or in this case, a truck, whatever. So it ain't easy, and maybe they're gonna get this thing turned around. But the fact that we haven't even gotten to production yet, and we haven't even delivered any cars yet, and we're already seeing production cuts and costs are higher than we thought, and there's some macro reasons for that. But it's just this is not a good situation, I think. We had Lordstown on the show. What was that, last fall? I mean, these are all of these EV plays. A lot of them came to market via SPACs, are speculative, and you should know that going in. I mean, I think people know that now. Maybe they turn around. I don't know. Maybe it goes back to 30. No idea. But this is just a not a good situation, and an awkward, uncomfortable situation, I think, for all. And especially the fact that they're opening their facility in a couple of weeks, right, for the public. Going
to face a lot of questions from the public during these factory tours and test drives. So, I don't think they'll cancel that event. but obviously, that is a possibility now too.
Yeah.
Which could be announced. But, I discussed with Mitch on the show yesterday. I said one of the keys to watch with their earnings report was, are they going to announce a share offering and talk about new funding? And sure enough,
Yeah.
they did. And that was a big negative. The timeline and the production cut a big negative. And the short report, I mean, that might end up being the biggest negative at all, that they, have not responded to that. Let's face it, the SPACs have been an easy target of short reports. And, if you're the target of a short report, you really need to respond well, and all eyes are going to be on you. So you're going to be, watched going forward and really need to outperform. And in this case, it's an underperform. So, yeah. But anyways, let's keep
going.
I just go ahead.
One last thing. 1 in chat if you are long and strong, Lordstown Motors. 2 if you are not long and strong, Lordstown Motors. If you are long and strong, I'm sorry. This is what happens with stocks. They go up, they go down. But I hope they can turn around. I think the truck looks good, but we're a long ways, it seems, from that. And yes, are they going to issue new shares? We don't even really know. So they weren't super clear on that.
And there come the twos.
All right, now we know. Moving right along, Chris. What else we got?
Yeah, let's try to get through the rest of these headlines. I knew we were going to hit on Ride for a while, but we have VLDR, Velodyne LiDAR. So one of several LiDAR companies. It was announced today that founder David Hall put out a press release highlighting the need for several members to step down from the board, saying that the board and management team is fostering an anti-stockholder culture that is resulting in underperformance. This is the company where the founder stepped away, and now we're seeing a continued fight between the board of directors and the former founder. Don't know how much it'll affect the stock, but something to keep in mind going forward with VLDR. Then we have SRNG, Soaring Eagle, which I own shares of. Their target, Ginkgo Bioworks, announced that they will hold an investor day on June 24th. They also highlighted that they'll be participating in 3 upcoming virtual investor conferences, so May 26th, June 1st, and June 23rd. Keep an eye out on this one. This was one of the largest SPAC deals done. They announced that partnership with Biogen last week. Soaring Eagle, a partner in the printing of DNA, covering several different areas, including vaccines, drugs, agriculture. So keep an eye out on this. They're going to get, some new press coverage out of these events. We have SRAC, Sable Road Acquisition, saying that Momentous, who they are merging with, informed the company that it does not expect to fly any missions in 2021 based on information from SpaceX. Says that SpaceX is suspending its Momentous-related efforts while Momentous works to secure approvals from the government. No surprise, yesterday, SRAC shares were down double digits. This is one that has fallen dramatically. This is one, that I have been behind. I do like it, but there is some worries here to get sorted out. Their former CEO, who had ties to the Russian government, stepped away because of some possibilities of the deal not going through. And now you have that partnership with SpaceX kind of coming into question of whether or not they will get those flights done with SpaceX, in the future. So SRAC now down at 1021. Keep an eye out on this one. We have PSAC, which is merging with Faraday Future, an electric vehicle startup. So they announced the grand opening of FF Futurist Experience in New York City that will allow the public to see its upcoming FF91 for the first time. Again, as I said, lots of EV companies now doing this, where they do those in-person experiences where you can see the car, you can get in the car, maybe even test drive or test ride the car. Good brand awareness here from Faraday Future. A couple upgrades today. We have LAZR, Luminar Technologies, which of course has been in the news for that possibility of a partnership with Tesla. Berenberg initiates coverage with a hold rating, a price target of $18. And then we have Virgin Galactic, SPCE. Morgan Stanley maintaining an equal weight and lowering the price target to $25, saying space tourism is a tough market. CCX set a vote date of June 10th with Skillsoft. And then we had a couple rumors yesterday. So Chia Project, Bloomberg now saying the company could go public via SPAC or IPO later this year. This is a crypto company, and interesting that this is actually a new green, environmentally friendly crypto company, which could really fit into, the news out there from Musk and others looking for ways to, mine crypto that's less damaging to the environment. And then also GIG is in talk with artificial intelligence company Big Bear, that rumor out there from Bloomberg. We did have 2 deals announced this morning. So ticker PTK, taking Valens Semiconductor public. This is a market leader in high-speed connectivity, a proven track record of successful technology innovation and standard setting for high-speed wired connectivity solutions, working with several automotive customers and also some key players in the audio, visual, or video industry. They've shipped over 25 million chipsets worldwide. Samsung, Aptiv, and Goldman Sachs among the investors in the company. Revenue of $57 million in 2020, and they expect compounded annual growth of 48% from 2021 through 2026. Then our other deal announced this morning. This was one that was a rumor. Yesterday we talked on the show. Ticker LEGO, which I own shares of. No, this is not Lego, the toys. This is Lego, the SPAC, Legato merger, bringing Algoma Steel public at a valuation of $1.7 billion, valuing the company at 1.9 times estimated adjusted EBITDA of $901 million. They also plan to list on the Toronto Stock Exchange after the merger is completed. Current Legato merger shareholders will own 19% of the company. Algoma Steel was founded in 1902, so over 100 years old. It's a manufacturer of hot and cold steel products, produces advanced grades of steel for industries like automotive, shipbuilding, energy mining, defense, and manufacturing. Canada's only plate producer and home to the low-cost direct strip production complex, produces an estimated 2.8 million tons per year, a key supplier to Canada in the Midwest of the U.S. So prices of steel have soared in 2021, leading to strong returns. We've seen STLD up 68%, X up 45%. Algoma was acquired in 2007 for $1.6 billion by Indian conglomerate SR Group. Company has completed a restructuring after the declining price of steel and now received a credit rating upgrade in February from Moody's due to the price of steel and expected positive free cash flow. Algoma now focused on sustainable efforts in steelmaking going forward. Shares were up 3% this morning. What do you think, Spencer? A steel company going public via SPAC, that's a little bit different than the normal EV, and others that we talk about.
I don't know if I remember that. If I remember another one of those happening. Do you?
Yeah, I can't think of the last time we had a steel company go public SPAC, if ever. But no. This is a interesting one. I'm long shares of LEGO. I'm also long shares of STLD, Steel Dynamics, which, has performed quite well this year, with the price of steel rising. So this is an interesting one to me. They're focused on some sustainable efforts. And then also, it's a restructuring, right? They kind of, were about to go under and they've been saved. And now they've got a SPAC merger. They've got a credit rating upgrade. So things starting to turn around for Algoma Steel here.
All right, we are a couple minutes late for our guest, actually. So why don't we skip the? That was the last of the headlines, was it not?
It was. Yeah, we can dive right into this.
All right, so let's we'll get to the schedule and the watch list and all that stuff later on here. But let's bring on a couple of our guests that I mentioned at the top of the show, if we can, in our SPACs Unlocked segment. All right, joining us now, as I mentioned at the top, Rajiv, Shukla, Chairman and CEO of Alpha Healthcare Acquisition Corporation, ticker AHAC, and the CEO and founder of Humacyte, the company that they are buying, Dr. Laura Niklason. Dr. Niklason, Mr. Shukla, welcome to the show.
Thank you, Spencer. Good to be on.
Thanks for having us. We're excited to be here.
Welcome to you both. We'll start and dive into the questions here, so gonna start with you, Laura. So up first, Humacyte, the big question here is why a SPAC deal to bring the company public, and was a traditional IPO, being considered?
Yes, well, we considered both pathways. Obviously, as we all know, 2020 was a very active year, both for SPACs and traditional IPOs. Humacyte had really reached some thresholds during 2020. We really validated our commercial scale manufacturing system, so we can now manufacture human tissues at commercial scale. We're really the only company in the planet that can do that. And these tissues are universally implantable. They can go into any human recipient so far and without rejection. So we had really crossed that milestone. And we had also, by last year, accumulated a tremendous amount of clinical data. We've been implanting our engineered blood vessels into patients for more than 8 years. And so we had a large data set that really allowed us to have a lot of confidence that we understand that the vessels work and how they work in patients. So given those two things, we really looked closely in late 2020 at taking the company public. And we were talking to some banks, and we certainly had the IPO avenue open to us. But we were also approached by a number of SPACs during this time period. And, the decision to go with the SPAC was really kind of twofold. One, Rajiv's organization at Alpha, is a very experienced and savvy organization. These are long-term healthcare investors, so they really understood the healthcare investing market. And so they were good strategic partners for Humacyte. But in addition, for companies that are really, I believe, transformative and a little bit out of the box, companies like Humacyte, going public through the SPAC route really allows us to interact closely with investors over a prolonged period of time and really explain our technology and our results and the value proposition of the company. And so it just made a lot of sense for Humacyte to take the SPAC route.
Awesome. And then Rajiv, I turn to you, AHAC, the SPAC. You had your choice of, lots of private companies out there to bring public. So, what really set Humacyte, apart from other companies that you may have considered bringing public here?
Yeah, we looked at a lot of different options. There were some really great companies out there. There's a lot of superb innovation that's being done, that's been backed by a lot of smart investors. What stood out for us with Humacyte was that, like my previous investment in a company called Durham, Humacyte is one of a kind. There aren't any other clinical stage companies that I'm aware of that have an extensive pipeline the way Humacyte does, that are focused on very large market opportunities. If you look at our investment thesis, which is to find companies with a massive addressable market, a ideally an insurmountable lead in that market, which by the way Durham also does, and so does Humacyte, because they just have so much clinical data. They have 800 patient years of data that for somebody else to collect that data will take them time, by which time Humacyte will have progressed on to bigger and better things. So we really like the fact that it's focused on something very large. It's far ahead of the game. We also like the fact that the company was already very substantial at the time that we met them. So they'd already raised $500 million in the private markets. And, one of the best kept secrets, I guess, in the biotech industry is such a large company, and we were able to come in and swoop in on this thing. So we like the fact that the core science was absolutely solid. A lot of the science in the company is Laura's work over the last 20 years. She's collaborated with the best minds in the industry. She's built a terrific team around herself, like Bob Langer, for example, who's on the board of the company. We like the fact that the company has their own manufacturing setup, which is a significant area of risk for biotech companies. So, for most other biotech companies, the question is, do you have clinical proof of concept? That's how basic the question is. For Humacyte, they're so far beyond clinical proof of concept. They're now focused on finding ways to, reduce the level of risk for the product in the market. They have a commercial partner in Fresenius, which is the world's biggest player in dialysis, and Humacyte has a huge pipeline focused on dialysis, in addition to other vascular products. So we like the fact that they've kind of checked off the box on clinical risk, on commercial risk, on manufacturing risk, backed by a strong team and existing strong balance sheet.
Perfect. So, Laura, for people watching this interview that they might not be familiar with Humacyte, so tell us a little bit about what makes the company unique and those potential life-saving innovations that the company has.
Yes. So the basis of Humacyte's technology, which is really a technology platform, is to use banked human cells that we store in cryofreezers in the laboratory, and to grow those cells in bioreactors in such a way that these cells form completely new tissues. So, for example, for the last 15 years, Humacyte has really been perfecting its methods to use human cells to grow replacement human blood vessels. The blood vessels that we currently grow are large. They're 40 centimeters long and 6 millimeters in diameter. And these vessels have been tested in patients with kidney failure, with vascular disease who are risking limb loss and amputation, and also patients who suffered vascular trauma, like from industrial accidents or gunshot wounds. So we've been using these vessels as essentially repair and replacement tissues in patients for many years. We've also shown that these vessels, because of how we manufacture them and treat them, when these vessels are implanted into patients, we've seen no instances of any clinical rejection. So this means that we can essentially grow or manufacture human blood vessels that can be implanted into any patient without rejection. These vessels can be stored on the shelf for up to a year and a half. So we can make vessels, ship them to hospitals, and then they can be ready whenever surgeons and patients need them. We've also shown that after Humacyte's vessels are implanted into the patient, cells from the patient migrate into our tissues and essentially turn them into the patient's own blood vessel over time. So over time, these implants become a new artery in a new location that the patient didn't have before. So I really think that this is regenerative medicine in the truest sense. And our ability to do this is the result of, tremendous private investor support over a number of years and a great technical and manufacturing team that we've developed over the years. And I do think that, as Rajiv said, we've got a good 10-year head start on anybody else who would be trying to do this. So we've had our heads down for a while, and we've been working very hard, and we've established a real leadership position in the field.
Perfect. So, I'll turn back to Rajiv here, but then also to you, Laura. On slide 6 here, we see the massive market opportunity with multiple blockbuster products. Can you just walk us through a little bit of the thesis here? How does Humacyte really tackle, all these areas and hit this massive opportunity for the company and for potential shareholders?
Well, Rajiv, if you don't mind, I'll start off and then pass it off to you. But essentially, we have phase 3 trials underway now in the treatment of vascular trauma and also in the treatment of patients with kidney failure who are on dialysis. So those are the first two indications that we anticipate gaining approval for in the US and then more broadly in Europe and worldwide. In addition, we have phase 2 trials that are underway in patients with vascular disease in their legs, peripheral vascular disease, especially those patients facing amputation. So we would see that being the next product to come forward into the marketplace in a few years. But again, as I mentioned, Humacyte's technology is truly a platform. Because we can use the cells to grow tissues of different shapes and sizes, bigger, fatter, shorter, smaller. We can also grow tissues that have different mechanical properties, and even tissues that we can grow can be used to deliver different cells. For example, cells that produce insulin that might be useful for treating patients with type 1 diabetes. So because our manufacturing platform is modular, and because we can adapt it to create tissues of different dimensions and different properties, that will allow us, I believe, over time to address problems like coronary artery bypass, perhaps be a surgical option for tiny babies who are born with congenital heart defects who need a heart repair, patients with type 1 diabetes, and even patients who need other types of tissues replaced, such as airway or potentially the esophagus. So we think that there's a huge range of clinical opportunities that we're going to just continue to bite off one at a time.
So, Chris, what I'd add to Laura's points is, for us, it's a very important thing to have multiple shots on goal. This is a key term that folks in the pharma industry use all the time. And the idea is to have multiple drivers of value creation so that the company has, the ability to progress multiple things as opposed to be reliant on one product that could have, a 1-0 kind of outcome. So we really like the fact that the company has multiple products. The interesting thing is that if you look at the way those products are set up, there are vascular products and non-vascular products. What is the meaning of vascular? Vascular means anything that carries blood, right? So tubes, basically, arteries and veins that carry blood. And there's a whole range of diseases that one can get in the vasculature. So you could have cardiac disease, you could have blockages in those arteries and veins. You could have issues relating to kidney disease where the kidney doesn't work as well, and therefore you need to purify the blood through dialysis, right? So there's a whole range of vascular applications where the product that Humacyte is developing is the human acellular vessel. Now, that is a product with multiple applications, each of which have different clinical trials, and we have 3 phase 3 clinical trials underway. Now, if you look at biotech companies that have 3 phase 3 trials underway, they're worth in the billions, right? On the other hand, we've done this deal with Humacyte at an $800 million pre-valuation, which is the same valuation as their last private round, which was a $150 million private round in which Fresenius participated, right? So seriously smart people investing seriously large sums of money. And that's the valuation that we've brought to our SPAC investors, the PIPE investors and the SPAC investors, at a $10 price. So, we've made sure that we've looked at a company with multiple shots on goal at a very attractive valuation, and the risk profile is clearly different. Now, the non-vascular products, they're all very unique products. So, for example, we have a product which is aimed at type 1 diabetes, and that's a pancreas that can be implanted in an outpatient procedure, and that will cure you essentially of diabetes. Just stop for a second and think about that. No more injections on a daily basis, no more insulin monitoring constantly where you're on the precipice of a crisis constantly, right? And there are huge companies that are focused on this. Dexcom is focused on insulin monitoring. Novo Nordisk and other big companies are focused on insulin injections. If Laura gets this product to the market, which we are all rooting for her to do that, it's an outpatient procedure. You don't need to go under. It's like going to the dentist. That is simply mind-blowing. The value of just this type 1 diabetes product, is in the double-digit billions. Then they have, if you look to the next slide, they have a product which is focused on this cardiovascular stuff that Laura was talking for children. A lot of children are born with heart defects, and they need shunts to be put in. Those shunts currently are plastic shunts, and the kids outgrow them, and they require repeated surgeries to implant newer, bigger shunts as the child is growing up. So you have to crack open the chest and put these in regularly. If the HAV works, and we're working on it in the clinic, so we have to say if it works. We don't know yet, but if it works, and there are signs that it does, because the HAV becomes like the body's own living organ, then that single surgery will take care of the person forever, or at least longer than a plastic graft would. So just think about that. If you're the parent of a young baby that's born with a heart defect, how heartbreaking it is to see your child undergoing something so significant on a regular basis, right? And you're always worried about the child making it. So that's another example of something that they're doing, which is huge. There's another product right after that slide. The company has a lot of products. It's straight out of like a science fiction movie, and that's that Humacyte has made a lung. If you go to the next page after this, you can actually see the lung. And yeah, there you go. See, so currently, if you need a lung transplant, it's game over. If you have lung cancer or some other lung problem, that's it. You have to be in these horrible machines called iron lungs. If you see this picture that's from Laura's lab, you can actually see the lung inhaling and exhaling inside a plastic container, inside a glass tube, right? And the idea is we will develop this, and one day we will have the ability to implant entire lungs into human beings. Imagine how significant that is, right? So we like that. And the best part is all of this stuff is not something that's going to be decades into the future. Based on the company's plans, the company expects to file their BLA application, biologic license application, to the US FDA next year. Now that depends on them completing the clinical trial and a whole host of external factors. But the company's plan is to file the BLA next year. And given the enormous medical need, the fact that the vascular trauma product has the backing of the US Department of Defense, which is a big deal. It's a product that has received an RMAT designation, a Regenerative Medicine Advanced Therapy designation, which is a fast track designation. We are very hopeful that we'll get this life-saving product to market quickly. And just imagine how many biotech companies are in the market currently that are valued in the $1 billion range, with 3 phase 3 trials and an impending BLA application next year.
Yeah, perfect. That segues to my next question, kind of laying out the timeline here. So Laura, now as a publicly traded company, there's going to be a little bit more, pressure on the company to really, lay out those dates moving forward. So, Rajiv started laying this out, but talk to us a little bit about the phase 2, phase 3 trials. When are the next dates that shareholders should be looking forward to?
Well, again, the rate of trial enrollment is something that we can influence, but we can't control ultimately. But I will say that we anticipate that our phase 3 trial that's enrolling now in dialysis access, we should complete enrollment of that trial by the end of this calendar year, by the end of 2021. And that would mean, since those patients are followed up for a year, that we would get some top line results maybe a little bit more than a year after that. But our first clinical indication is in the treatment of vascular trauma. So this is patients who have acute injuries, again, motor vehicle accidents or industrial accidents. By the time an injured person makes it to the emergency room and then gets worked up, that can be several hours. Where if you have a damaged artery, your limb is getting no blood flow at all. By the time that patient finally makes it to the operating room, they can have a limb that's had no blood flow for 3, 4, 5, 6 hours. And so the value proposition for Humacyte's acellular vessel is that a surgeon could take that off the shelf and revascularize that trauma patient and restore blood flow to that limb essentially immediately, rather than trying to harvest some other blood vessel from the patient's body, which can take another hour. So that trauma trial that has been supported by grants from the Defense Department is still underway, and we anticipate filing a BLA application based on the results of that trial sometime in 2022. If that were the case, then we expect to obtain our first approval in vascular trauma sometime in 2023, and then be on the market at that time.
Perfect. And then Laura, or if Rajiv wants to jump in here, I had a question about the commercial scale manufacturing. And then we actually got a question here in the chat from John Ullman saying Humacyte invested in production facilities, which speaks to confidence of FDA approval. Will larger facilities be needed in the future? So maybe talk a little bit about the commercial side of things here.
So we have spent a tremendous amount of time and effort, essentially taking our manufacturing process to where it is now, which is, we believe, at full commercial scale. So we spent the last 5 or 6 years engineering manufacturing systems that are basically large incubators, as big as a school bus, where we manufacture large batches of our engineered vessels. We have 8 of these systems installed in our building now, and these are modular systems. So when we want to expand production capacity, we install more of these school bus size incubators into the building. I can tell you that in the building we are right now, we have 8 of these units installed, but we have room for probably 40 or a few more. Since each of these units makes about 1,000 vessels per year, that means that our production in this building can go up to about 40,000 vessels per year. We think, based on our market uptake, that will certainly cover us for the first couple years before we would have to build out another facility.
Perfect. And then another question here before I think we're going to dive into some questions from the chat. So Rajiv, you mentioned here, part of the team that took Durham Tech public via SPAC, DMTK, that's been a pretty well performing, de-SPACed company. Do you think that puts, pressure on you to land a great deal here with Humacyte? And also, does it help shareholders kind of see the long-term future of a company like Humacyte with patients in Durham Tech paying off?
Chris, it absolutely puts pressure on me, and it's something that I take very seriously. I'm an investor. My track record is everything to me. Durham Tech is not only a good deal, it is the best performing SPAC deal of all time in healthcare across all geographies. And this is even though the stock has weakened, with the recent market move away from growth into value. The stock was trading at $85 in February, March. And at that time, it was the best performing SPAC transaction across all sectors and all geographies. I mean, people talk about DraftKings and Nikola, but Durham Tech was the best performing deal. And the funny thing is, Durham Tech hasn't even gotten started yet. Durham Tech has a very serious ramp up ahead of it. And, I expect Durham Tech to be easily north of $100 in the coming months and years. Humacyte, in my sense, a bit like Durham Tech, unique story, huge opportunity. I think Humacyte is probably going to be a $20 to $50 billion company if they successfully launch their products as planned and so on. It's purely an execution game. But if you believe in the management team, the company should be worth somewhere in the $20 to $50 billion range, based on whatever parameters you'd like to use, whether it's multiples against listed comps, precedented M&A comps, fundamental analysis, and so on. All of those metrics take you in that direction, which means that the stock will be somewhere in the $200 plus range, in the years to come. So our view certainly is that Humacyte is going to be one of those companies that people will look back at one day and say, you remember Amgen when Amgen was getting started, or Moderna when Moderna was starting off? That's how people will think about Humacyte one day.
A couple questions from our chat, and then we'll let you guys hop. Rajiv, this one I presume is for you. Is there a timeline on a vote date and the quarter that could be announced?
Yes. So, I'm sure you're aware that the SEC revised some accounting guidelines for all SPACs. That has resulted in a lot of SPACs being slowed down, principally because they've had to restate their 10Ks and 10Qs. We got our 10Ks restated very quickly. We filed our Q1 on the 17th on time. A lot of other SPACs, I would say, in fact, most of the other SPACs have been delayed on filing their quarterly numbers. We did that exactly on time. The advantage of which is our S4, where we've heard back from the SEC with comments. Our next submission on the S4 will have the updated financials, and those are the financials that will, which are the final numbers, hopefully. That'll show up for the effective S4. So because of our experience and focus, we're not running a fund on the side. This is what we do. We focus on SPACs. We've gotten those filings done on time, which means our S4 will ideally move quickly. Our expectation is that we'll file the amended S4 in the coming week or next week. And we should hear back from the SEC with comments again within 2 weeks of that. There's another round of comments after that, or another 2 rounds of comments after that.
Okay. We
should see a vote in July, assuming all of those factors go as estimated. So we're not giving you guidance on the
right.
Very hard to give guidance on regulatory stuff that is not in our control, but
sure.
We're planning for July.
Sure. And then a question for Laura: the cells for the tissue, where do those cells come from?
Yeah, those are human vascular cells that are actually obtained from organ donor tissues. So, for example, if a patient dies and becomes an organ donor, their liver might go somewhere and their kidney might go somewhere else to some other patient. But actually, the large blood vessels in the body don't have a transplantation use. And so for more than a decade, Humacyte partnered with a number of organ procurement organizations in the US to obtain these human tissues that would not otherwise be usable by patients. And we isolated cells from those tissues, vascular cells. And we identified subsets of those cells that work extraordinarily well in our process. And we currently have a cell bank that can support our production of vessels for the next 20 or 30 years.
All right.
Can I add a quick disclaimer? So,
go for it.
A lot of people ask if these are stem cells. These are not stem cells.
Right? No, they're regular old human differentiated cells. They're not stem cells. They're not embryonic stem cells.
All right, Rajiv Shukla, Chairman CEO, as I said, of Alpha Healthcare Acquisition, the SPAC that is acquiring the company, founded and CEO. that Laura Niklason is the founder of Humacyte, and this has been a fantastic, I think, informative interview for everyone. I had no idea that this stuff was even possible, so thank you both so much for joining us today.
Thank you, guys.
Thank you so much for having us.
Thank you.
God, I swear, Chris, every time we have anytime I talk to executives from a biotech company or healthcare, I always feel dumber, because I don't even know.
No, I'm with you on that today. So
they're on another plane of.
I didn't know that some of this stuff was possible.
Me neither.
And here they are bringing it to market, hopefully soon. So isn't that crazy? Implantable, new devices here, and could change type 1 diabetes, for forever. Right? That's crazy. The
future has arrived, my friend.
Yeah. So Spencer, I'm wondering if you can pull up the chart for DMTK.
Okay.
So DermTech, maybe a 2-year chart here.
Sure.
So DermTech was the first or the last SPAC done by Alpha Healthcare. So Rajiv's group here. And this one, it had a similar where it traded up to $20, I think, and then it dropped back down to $10, and it spent months and months at the $10 level, after completing that SPAC merger, and then this thing really started taking off, as it really, the story unfolded for DermTech and those patches. I know this has been a stock, that's been talked about on Power Hour and other shows. Has some exciting future technology here with, diagnosing things through a patch. So, it's interesting. I think there is a lot of pressure, as Rajiv said, on him to land another good deal right after bringing DermTech to market. And here we have Humacyte, which, traded over $15. But now it's dropped back down to $10, as SPACs have come down. But this is one of those, where maybe you put it in an IRA, you set it aside for 5 years and you don't look at it because, they are a year or two away from really having those catalysts play out. What do you think based on what was said today, for their future?
I mean, it all sounds great. The obvious caveat and that they themselves said is, this is going to be a massive gainer if everything goes according to plan, which we know it very often does not. And we know with these types of companies, right? I mean, funding is important, right? This stuff ain't cheap.
Exactly.
Stuff is expensive. It costs money. They're as is normal, as is par for the course. They're probably going to have to do some kind of fundraising in the future. That's normal. So
yeah, for sure.
There's that as well. The fact that they've got, I guess, more than one egg in their basket is good, right? Or as Rajiv said, more than one shot on goal.
Yeah, the shots on goal, I did think that was interesting that they at least, have a couple different areas, that maybe can offset then, any roadblocks going forward, maybe.
You're right. So the studies are ongoing right now, and they couldn't really get too specific as far as timelines there. But if they go well, then yeah, I'm interested. But this is like a binary event sort of thing for now. It all sounds great, but now we got to see sort of if it works. Also, I didn't really understand, and maybe I should have followed up about this because I had thought that lung transplants are a thing.
Yeah, I thought so too. I think that's very difficult, to maybe get the lung to do that, or do that transplant. So maybe, it's going to change that, but the lung wasn't even on my radar. It was really that artificial pancreas, right? And, we talk so much about these companies that monitor, blood sugar and, help with diabetes monitoring. And here they're actually going to change it, potentially with the artificial pancreas, that an outpatient surgery too. That surprised me, right? That could be just done as outpatient. So guys, that ticker was AHAC. Spencer, I want to bring one up that I know you've actually talked about on this show and on pre-market prep. That's IPOE, merging with SoFi. So the vote date is set for 2 days. I don't remember where you called this at, but I know it was below the $21 it's at today. So Spencer, I bought calls on this a couple weeks ago, and I actually sold them because I took my profits, and now I have no position in IPOE, and I'm wishing I would have gotten some common shares along the way, because this thing is looking like it's going to rip into this vote this week, and I think going forward, what are you thinking of IPOE and that bank charter catalyst hopefully coming?
I said I like this long term, but that's I wouldn't say I call this this is maybe a bit of a lucky thing. Congratulations, Chris, if anyone is in it from whatever 15, good job. I am highly skeptical of this short-term run into the vote date. Let me see. Again, I said I like the company that they're merging with. I don't own any. I'm not long it at all. I just like it, and I'm waiting on this bank charter. But let's just slow down everyone for a second here, and let's just wait and see how this thing behaves after the vote. The vote is the 27th, right? Okay. So that's Thursday. So let's just chill, everyone, and wait and see how this thing digests after the vote date. It wouldn't shock me if it goes back down to like 18, right? Or 17 or whatever, 16. I don't know why it's running. For those asking, I don't. Although I haven't really been in touch with markets for the past couple of days, so I really don't know a whole lot. But maybe there is news that I missed.
Spencer, it's something Mitch and I talked about yesterday, and I think last week too. We're starting to see, and I know you probably saw this, months ago, where SPACs used to actually, trade positive, going into the vote date and after. Sure. And we're starting to maybe see a reversal in that happening again. OWL, the ticker, is one that recently completed its merger. And since then, it's now trading around $12. And this was one that was right around the $10 mark when it completed its vote. And here, it's starting to go higher, a week or two after, the merger is actually approved. So, for a while, we were seeing all these SPACs come back down to $10 or below after the vote. Yeah. And now we're starting to maybe see that reversal coming. So, what do you think of that? Do you think we maybe start to see some of these, trade higher after the vote, or you think we're going to see, the majority come down here?
Well, first, we're talking about one. I guess we're talking about two stocks, right? We're talking about IPOE. We're talking about OWL. The run up into an event, whether it's a vote or something else, I guess that's the only event that is on the calendar for these companies. That is interesting, but that's only half the equation, right? The other half of the equation is what happens after the event, and so the OWL vote. So that already happened. You just said, right?
Yep.
Yeah, and so I'm sorry, when was that?
It was a couple of weeks ago that one completed. Okay,
so like two stocks running into the vote date, great. That does not make a trend for me. Again, IPOE is one that I'm interested in, but I'm gonna want to see a lot of them. It's gonna take a lot more than two for me to be like, oh, like sentiment's turned here, right? Like for sentiment to turn in SPACs. Like I would think you've got to see this happen 5, 6, 7, 8, a dozen times, right? And maybe then you say, okay, yes, sentiment has turned. We are now this is a thing. We are now back to buying SPACs ahead of vote dates. And then the other side of that coin is, do we sell the news? I don't know. It's why I'm skeptical of this IPOE thing. Like I am not jumping in IPOE right now. Because I just don't know. I don't know. Like I thought SPACs were still out of favor. Is what I thought. Maybe that's turning.
And going back to about the end of April, Spencer, we're about 50-50 right now for ones that have gone higher after the vote. So like STEM, STEM is another one, and SKIN. Those are both trading higher. Since the vote. But then on the flip side, we have ZEV, and there was another one that Blade, BLDE, that are both trading around $8. So we're about 50-50 right now on one. Yep. So, again, they're not all going to go higher after the vote. But I think this is the first time we're starting to really see, some with that positive momentum coming out of the vote in months, right? Like it used to be, sell into the vote, right? Since this rally ended in SPACs, it was sell before the vote or trade in your shares for $10 because it's going to fall below 10 right after the vote. And now we're getting a mixed bag, about 50-50. So I think that's interesting to see here. And I really think IPOE, could be a changing point, right? Because it's a well-known company, right? SoFi, it's got strong backing. So I'm interested to see how that trades this week.
Well, let me tell you what my plan will be. So the vote date is the 27th. And then I know that it's supposed to.
I would guess Monday would be the ticker change based on Friday and the weekend. So or Monday's holiday, so we're looking at Tuesday.
Yeah, June 1st, right?
Yeah.
So if on June, here, let me pull up a chart. If on June like 2nd or June 3rd, this thing is like above 20, I'm game. I'm game. If it's not, then I'm not. Is for now. It's sort of how that's like my plan of attack for this. But enough about that. There are other SPACs merging or voting on their merger this week. Chris, you want to run through the calendar real fast, and then we'll
so this week we have IPOE on the 27th, and we have STIC on the 28th, merging with BarkBox. What do you think, Spencer? Do you own dogs or no?
I've actually. This is like an unpopular thing, but I've never had a dog. I will.
Same.
Okay, so good. So I'll get a dog one day. I'm like the only person of my friend group that did not have a dog growing up.
I had cats growing up, not dogs. My wife had a dog, so we're in the middle on what we're gonna have someday. But I don't want pets until my kids are old enough to help take care of the pets. So, but I know Mitch has dogs. So BarkBox, very popular out there. That's another one. Where does STIC trade next week? Because that's one trading below $10 right now. So does it get that momentum going into the vote date, or does this one fade? So, and based on the 50-50, maybe STIC fades. So, but it looks like it's noon. It looks like that's going to be a wrap for SPACs Attack today. Thanks for hanging out, Spencer, and hopefully we'll see you more this week.
How many likes are we at? Let's get to, let's get to over 100 likes.
We got to get to 100. I mean,
100. Get to 100 likes. Subscribe. Again, the link to the free share of Tesla contest is in the description. Is it? Oh no, it's not. I will have to get it in there. I hear Luke. That means he's live.
That means he's live. I could hear him.
I'm pasting the link. in chat. There it is. Win a free share of Tesla. Hit subscribe. Everyone have a good rest of your day. We're gonna hop off. The Power Hour is starting right now.
Thanks.